What's going on, guys? It's GBP, baby. Welcome back to another video. I hope everybody's doing well, and I also hope everyone's staying safe in these conditions. We've had some pretty ugly price action today, and I can only imagine we're going to see more ugly price action as we move towards the end of the week. Now you can see that I've cleared my charts purely because today didn't deliver as I wanted, so I'm just going to start from the weekly again and figure out, okay, where's price likely to draw to. I do want to make it clear I'm not trading this week purely just because of non-farm payroll and just how difficult it is in terms of probability and how much risk there is in environments like these. So firstly, I want to bring our attention to this fair value gap. I did talk about this on Sunday and yesterday, so nothing new here. And we'll just get this marked out as weekly fair value gap. So I do still ideally want to see price eventually trade into this. And if you remember yesterday's video, I did say how I wanted to see it trade into it today, especially with how bearish we were on the Monday. However, we didn't get that. So if we continue to trade higher moving into Wednesday, it's likely we'll see a reversal on the Thursday or Friday to then target this. Because as far as I'm concerned, this is the sell side target. And if we're bearish, we should be looking at this as a draw on liquidity. So definitely keep that on your charts. I'll also have this low right here marked out for sell side liquidity. We'll just move this to the right. And then I also want to bring our attention to this weekly bearish order block. And that's because if price is to continue trading higher on dollar, if prices continue trading higher and we do want to see it turn around, it needs to turn around at some kind of PD array. A bearish order block such as this would be ideal. So we can get this marked out as well. And we'll put weekly bearish order block. And now we'll drop down to the daily. Now, before I continue, I do advise you to definitely join the mailing list. The link is in the description. I have a lot of content coming this month, hopefully, so make sure to get your name on the list. But yeah, here's the daily, and you can see how we wicked below yesterday's low, which we closed on. We closed on a low and then traded a little bit higher and also trading into this low right here. So kind of a consolidated day, and as we go to the 4 hour, you will see how ugly it was in general. One thing to take note of now is that we do have a fair value gap that's formed between this low and this high. Again, this could be a premium PD array that price may want to draw to on dollar if they are going to continue sending price higher. So let's make this orange and we'll write daily fair value gap. And it'll be interesting to see how price treats this. And what I mean by that is that if we trade up to this and we find resistance, we can start looking for sell side, but if we trade above it, we can use it to act as support to then send us towards that weekly bearish order block, which was our next target. But ideally, I'd like to think that we can maybe trail up on the Wednesday, and then Thursday and Friday we'll witness some kind of reversal to send us even deeper into this weekly fair value gap. So let's go to the 4 hour and you'll see how price delivered. We traded higher, creating that swing high, and then came back down into its range. So this is what I mean, very consolidated. Not too much movement. We did take out this swing high and start reaching into this range, but you can see we got rejected at this level, and now we're just stuck in this range. So this is why it's really difficult. You can see how they're clearly engineering liquidity both on the buy side above this daily high and now on the sell side, because we know that we have this sell side liquidity, which I marked out from the weekly, and we can now pair that and couple it with the sell side liquidity that Tuesday's created as well. So that's something to take note of. You can see how they're just whipping price back and forth, engineering all them orders in ready for non-farm payroll. So let's go to the 1 hour, and you can see how we traded higher, running out these stops, came back lower, and now it's just a matter of figuring out, okay, are we going to grab more sell stops and trade on higher, or is price just going to carry on rallying and then turn around and trade lower? And this is why probability and this environments like these are so difficult. So let's say Wednesday we do trade lower and we start reaching to the sell side liquidity below here. I'd then expect reversals to trade higher and take out this Tuesday high. However, if we moved into Wednesday and we traded higher and took out that Tuesday high, I'd want to see a reversal and us trade lower. So it is simply an if this happens, then that happens, which is typically how I look at the charts anyway. Or they could just be really messy about it, and Wednesday we just continue to consolidate. So yeah, ideally, like I said, we do see price trade lower. Same as yesterday, I'd rather see some down close candles and down close price action. The fact that we took out these highs right here, and I'll just show you what I mean. The fact that we've taken out those stops says to me that we could very well move lower into this sell side liquidity, and that's completely fine. So ideally that happens. However, like I said, they might want to engineer more stops in, keep pushing price higher so that, you know, all those sell orders get built up below here, and then target that later on in the week. So that's pretty much everything on dollar. Not ideal. You can see how the fair value gap sat just above these relative equal highs as well. So I do believe that we will end up taking out both sides, both buy side above here and the sell side this week, meaning that say we take out the buy side first, we can then look at the sell side, this sell side liquidity as a target, or if we take out the sell side, then we can start looking at that buy side. So at least we know that once one happens, we can start to frame how we're going to get to the next one. But even just looking at the price action and looking at the wicks, you can see how ugly and high resistance these kind of conditions are. And this is why I don't really want to be in it, because it's not very nice, it's not very safe, and yeah, we just need to be cautious. So let's move into GBP USD. We'll start here on the weekly as well. And you can see how we're trading on higher. Ran out these stops, I've already spoke about that, which is completely fine. The fact that we've grabbed sell side, however, means that we should be looking for some kind of, the fact that we've run out buy side liquidity on a weekly basis right here suggests that we should be looking for some kind of sell side PD array. Now, yes, there's a massive weekly fair value gap down here. However, I'm overall bullish on pound, so ideally we don't even need to look or worry about this. There is, however, an implied fair value gap right here that we can draw out, and I'll put weekly implied fair value gap, and it'll be interesting to see if price can get down into this. So let's get this delineated, weekly fair value gap, or weekly implied fair value gap even. Now remember, price can only, this will only be permitted to get traded to if dollar is to trade on higher. So what do I mean by that? If we look at dollar real quick, and we go to the daily, you remember that I was saying that I believe that both sides of this candle will get taken. So if we are to trade higher, moving into Wednesday or Thursday or whatever, if we trade up higher into that, that will allow GBP to then fall lower into this weekly implied fair value gap, which is completely fine. So here is Tuesday's trading. You can see how we wicked above Monday's high, traded on lower with a down close, and then moving into tomorrow, I'm anticipating another down close to try and get into that implied fair value gap. All these wicks down here as well, I'd like to think that we can start reaching into this range. One wick specifically that I'm going to look at is this one, and you guessed it, I'm looking at the 50%, which is consequent encroachment. So let's get that marked out and dashed. So ideally, price trades to this, creating a low, and then we can look at a potential turnaround at this point, and that will also allow us to grab stops below Tuesday's low right here as well. So moving into tomorrow on pound, I do want to see a down close day, which obviously means potentially creating the high in London and then downwards price action for the rest of the day. But with it being Wednesday, with us having non-farm payroll and pretty much high impact news the whole week, there's only so accurate we can be. But let's just thicken that up and drop down to the 4 hour. And as you can see, we traded up, taking out these buy stops. Remember, this is weekly buy side liquidity, this level is. Look how we broke down, traded into the fair value gap, and on a 4 hour basis, we're now looking quite bearish. So moving into tomorrow, I would like to think that this Tuesday low right here can be used for sell side liquidity. And as price trades into this on a 4 hour basis, we can be looking at dollar to potentially trade on higher into this Tuesday high right here and towards that fair value gap, and remember that weekly bearish order block. So you can see how I'm framing my ideal play out for price, and so long as it goes along with it, I'm happy to be in the charts and follow along. However, if it doesn't go with what I want to see, that's when I step out, which is why today, when price didn't deliver how I expected in yesterday's video, I simply stepped away and just let it do its thing. So yeah, we've traded up into this fair value gap. We've traded up into this fair value gap, and we can look at the 50% level, and you can see how volume is remaining below it. This is, again, bearish signaling. We've run out stops above this high right here, but volume is clearly respecting that 50% level and pretty much respecting that 25% level. Let's take a closer look. There's a 25% level, and you can see how we're turning around at that level. So again, these are all hinting to potential lower prices. And where would I target? Daily lows, ideally, right here. And remember, we have this massive weekly implied fair value gap and a consequent encroachment where I'd like to see price potentially reverse. So let's go to the 1 hour just to get a better look. Let's make this a different color. And you can see how we came up, and look at that. You can't make this stuff up. You can see how that midpoint of that fair value gap on the order block, the midpoint of the fair value gap on the 4 hour has been respected pretty much to the tick on the 1 hour. And you can see how we've broken down now. So moving into tomorrow, again, maybe a short rally higher during London to create a high, and then I'll be looking at shorting opportunities to run into our sell side target below here, fair value gap down there, and then again a fair value gap down here, which just happens to line up with the consequent encroachment. Now, this is all ideal to me. Another thing to take note of is a breaker, high, low, higher high, which ran out weekly stops. Clear displacement to the downside. We've just returned back into this breaker. If we drag this out, it's a fair value gap now coupled with a breaker. So to me, this is an ideal setup, but we have to be careful still. Why? Because there's a lot of manipulation. We have non-farm payroll. It's best to be careful, but it would be nice to think that this can now provide resistance, this fair value gap, once we trade back into it. Maybe this breaker, high, low, high, high. In fact, let's get this marked out. I'm going to be paying close attention to this level. So on Wednesday, if we reach into this level right here, which is a breaker, high, low, higher high, I want to see, do we turn? If we start turning at that, that might be a beautiful setup for a potential run down into our south side target. If we trade above it, step away, let it do its thing. It's non-farm payroll week, we don't need to trade. So that's how I'm looking at pound. And now let's finish up on euro. We'll start on weekly with euro as well. Where are we? Now, okay, euro's moving a bit weird. You can see we've gapped on a weekly basis, allegedly. I'm not going to start with a weekly here just because of how disgusting it is. But what are we looking for? Well, if GBP we want to see trade lower and there's potential for dollars to trade on higher, then we want to see euro trade lower as well. So what has euro been up to? Well, we've taken out stops similar to GBP right above here. Very nice to see. And then you can see Tuesday's trading here, down close. So we want to see another down close day. So what kind of sell side PD arrays could we potentially be trading into? Well, we have this massive bullish order block right here. So this could be a target for price moving into the Wednesday if we are to trade on lower. So let's get this delineated. Daily bullish order block. And then if we drop down to the low time frame, maybe we can pair it with some PD arrays. There is also technically an implied fair value gap lined up with this. So if anything, this should add confluence. Now, the reason I'm a little bit more skeptical of this is because it's an implied fair value gap and not a clear fair value gap that's lining up with the order block. So it'll be interesting to see if it does act the same. If it does, I'm learning something, you're learning something, and we can apply that to our trading. But generally speaking, if we are to trade on lower, I'm looking at this bullish order block to be the target for price. So let's go to the 4 hour. And you can see how we delivered, ran those buy stops above this level, clear change in the state of delivery. Why? Because we've taken out this low, traded up into this fair value gap. And like I said, if we see a rally on pound and we see dollar fall a little bit, maybe during London to create the low, I wouldn't be surprised if euro wants to trade a little bit deeper into this fair value gap before then trading on lower, taking out that Tuesday low and into our implied fair value gap. As it's doing that, you can see it's also coupled with a 4 hour bullish order block right here as well. You can see there's a lot of layers here, which is very good. Let's make this red. And we'll get the midpoint. So what I'm looking at on euro specifically will be the midpoint. If we trade above that midpoint, I'll probably stay out of it. I'd want to see this respected, and then I could potentially look for shorting opportunities if I were to trade to run down into that Tuesday low and this bullish order block and this implied fair value gap. And it would be filling a liquidity void, wouldn't it? So let's go to the 1 hour, just get a better look at price. Again, a nice little high here, maybe grab some buy stops above there and then trade on low for the rest of the day, taking out that Tuesday low and into our range right here, which was that weekly implied fair value gap with a daily bullish order block. And on the 1 hour, a breaker as well. Why is this a breaker? We have a low, we have a high. This is the last up close candle before the down move, a lower low, and then this massive move higher. So if anything, if price does manage to get down here, I'd expect a strong reaction off of this level. So that's going to be everything, guys. I hope you found this insightful. You can see there, it does seem like there's setups forming. However, again, in terms of risk, if you are going to be trading, definitely lower it just because it's very heavily manipulated. They're clearly building in orders. And also Wednesday will be my last day trading this week if I was to be trading. So ICT highly suggests that. Get all your trading done by Wednesday, then let Thursday and Friday do its madness. But overall, that's everything for now. Don't forget to smash subscribe, smash the like button, drop a comment, and also join the mailing list. Thanks for watching, guys, and I'll catch you in the next one. Peace.